Good afternoon from Commercial Rare Coins and Precious Metals in beautiful and sunny Lauderdale by the Sea. Nice day out there. Hope your day is nice as well. Let's go over the markets today. We're going to go through this pretty quick because there's not an awful lot to talk about it. We're in bull markets, full-blown bull markets. So we're going to keep tonight's report pretty short. I'm sure you're thankful of that. Nothing long-winded from me tonight. Let's take a look at the New York spot prices and what they closed at. And I've noticed my page has added some extra things in here, including London, which we will ignore for many reasons. Irrelevant, I think, to some point at this point. New York spot prices, well, take a look at this. Gold closed at more or less 2,000, so we're up again. So that 2,000 mark, even though they hit it with 1950 early in the week. Remember, we've been talking about buy these dips. Well, 1950 was your dip for gold this week. Silver, 24 and change, $25 and change was your dip for this week. If you did not catch it, if you missed it, then boop, it's gone. So these dips, I keep telling you, buy the dips when you can. However, you know, that's just the logic of buying. If you got the money to do it and you're adding and you like averaging down like that. But overall, even if you're buying the dips, you're still buying up markets eventually. So, you know, maybe the smart thing to do is just go all in, because I don't think we're going to see many dips below 2,000 at this point. So owning a position outright is probably not a bad thing. And I got to actually re-examine that buy the dips. Does it really work? That's a big question mark. Give me your opinion down in the comments below. I'd like to hear it. Buying the dips, is it solid advice, whether you're doing stocks, bonds, or gold or silver? I'm going to look more into it. It's just something I've heard from Wall Street all these years and the financial channels, buy the dips. But is it really smart to? I don't know. I've been saying it for a while. If you can buy the dips and you haven't spent all your money in precious metals, why not? But meanwhile, let's take a look at silver here. $28 on New York close, and that is up about 40-50 cents here. So I like these 50-cent up days. I'm very comfortable with the pullback. I mean, that pullback we had, if you could buy it, fine. If you didn't, you know, big deal. Just hang on for the ride here, and that's basically what you got to do, whether you're a dip buyer or whether you're all in. Just hang on. We're in for a good ride here, folks. Let's take a look at, again, platinum in New York, 971, palladium 2225, hanging about the same, hasn't changed at all. And again, I said a while back ago, I think that palladium is not going to do much, and if anything, we're going to see gold rise to the occasion or go above palladium, and palladium will follow it maybe. Platinum to me is still too cheap. About half, it should be near the price of gold, in my opinion. Silver should be hitting that all-time high, because gold has certainly surpassed it a couple times. So I can see silver hitting 50 bucks. There, I said it. Okay, you can even say I said it. So let's see what happens. World spot prices leading a little higher. And as I've been saying for the last few weeks, or maybe even longer, I kind of forget because I do this every day, 5 days a week, these little reports, is that the world spot prices have been leading. So, for example, if world spot prices close a little higher than New York, that usually means next day New York's going to close a little higher. But this is just a trend. These trends work most of the time. Then one day they won't, but and then they don't at all. So it is a little trend that I have been noticing, is that world spot prices have been leading. If they're up higher, New York is generally going to close higher the following day. Let's see how that holds up. And let's take a look at, I like this, the world spot aftermarket prices. So let's take a look, and it looks like that aftermarket prices, which means the 24 global 20 closes in 22 hours, 39 minutes, whatever that means, is 2,000. So it's up a little bit. So I think we're going to have, it looks like if the trend holds through, we're going to at least have a par value day, or maybe a little bit higher for both gold and silver. And that's if that trend holds true. Anyways, let's see what happens. We can just follow these markets. That's all we can do. We can't we can try to guess them. That's what I've been doing. And incidentally, let me give you my opinion. I'm going to toss my coin here, and toss my coin. I'm going to pitch my coin, let you know if it's heads or tails, what the coin says. My guess is that we will be up a little bit tomorrow, more than likely. So let's see what happens. And that's just my guess based on the little trend with the world spot prices that I've been watching here. And let's see what the coin says. We'll give it a good little toss here, or a spin. And let's see where she lands. Bull or bear? Coin's been pretty right lately too, except I think, ooh, bear. So the coin diverges with my opinion. Coin thinks it's going to be down tomorrow. Doesn't say how much, of course, and I think it's going to be up a little bit. And that's all I can say about that. Let's see what happens. Anyway, a couple articles here I like. Zero Hedge. You know, love them or hate them. I hate the advertising. I can't stand the way the page is set up. Some of the stuff they put on this is just ridiculous. But, you know, there's a lot of articles and a lot of blogs and a lot, I don't know if blogs is the proper term, but a lot of things written that are really good on here and that you just don't see with the Wall Street Journal, which is really, or any other corporate news sources, which is really disappointing because you would figure the professionals would have all different viewpoints. And all different types of stories and all different types of angles on things, but they don't. They're kind of one-dimensional, in my opinion at least. But I like the headline here: Gold jumps, dollar dumps as S&P ends shortest bear market in history. So think about that. The S&P actually was up, record high. Oh my gosh, it's just crazy. What's going on here? Is it all that money they're printing causing stocks to go up? People just looking for places to put their money? God, just wait till a majority or even a small percentage of these people start putting their money in gold and silver. My understanding is that if 1% of Wall Street bond and stock money went into precious metals, man, we'd all be rich guys holding on to metals that we have at this current price. Let's move along to, I recommend reading this article. I kind of liked it. It kind of gives an assessment of what's happening today, bonds, and does a little comparison. Let me move on to another one. Just happens to be also, again, Zero Hedge, but I like this article here too. Very well written. It's been talking about what we've been talking about for a while. World's largest gold ETF continues to source more and more gold from the Bank of England. And this is what I've been talking about. ETFs, you don't own a piece of gold. You own a piece of paper, or not even a piece of paper anymore. That's the old days. You own a digital 1 0 or a digital, you just own something digital in the air, something or on a hard drive somewhere. You don't own any gold at all. And this article really goes into that. It's kind of scary. If you get a chance, go to Zero Hedge and just type in this right here: world's largest gold ETF continues to source more and more gold from the Bank of England. And you know, whether the author that wrote this is spot on or not, and it looks like a bullion star. Oh, they sell bullion too, but that doesn't mean anything. I'm not afraid to show you guys competitive or competitive people. I should say supposed. They are probably competitive, but they're online sellers. I'm not. I'm close here, and I don't do online sales anyway, so there's no competition between me and Bullion Star. But a great article written by them. World's largest ETF continues to source more and more gold from the Bank of England, and it talks about how really these ETFs may not own this gold. And I've been saying this for a long time. If the ETFs don't own this gold, all you own is nothing. And my understanding too, from what I heard, is that they do own some gold, but you may own that ounce of gold on your ETF with 100 others. And the silver is the same way. So I don't like that. That's third-party risk. It completely negates the whole reason why you own gold and silver. Actually, to get rid of that third-party risk. When you have a gold and silver bar, coin, whatever it is, in your hand, the only thing you have to worry about is theft. You don't have to worry about the gold ETF people that run that going bankrupt and then finding out that they don't have the gold to cover it, which is probably the truth. Read this article right here. I recommend it. And again, I told you I was going to start reading a lot of these things to you, but you know what? If I read them to you, you're not going to learn as much as going and looking yourself and reading them yourself. And again, always read behind the lines, and also remember these are opinions, and this is my opinion too. So make your own. I like this little cartoon about ETFs too that I saw in that article. Here you go. ETF holder. I'd like to see my gold. Well, you don't own any gold, sir. The trust owns the gold, ETF issuer. And that's absolutely true, folks. When you buy an ETF, GLD or SLV, you do not own the gold at all. You don't own an ounce of gold. That's an illusion. The trust owns the gold. Look up what a trust means. The trust does not mean you. So that's third-party risk in a major way. So here's the second part of the cartoon. Okay, I'd like to convert my shares into gold. Well, unfortunately, that won't be possible. Another true thing about ETFs in gold and silver is that you cannot convert that to gold and silver. All you have is X or zeros and ones. You have digital money, a piece of paper. That's it, whatever digital is. But you don't own any gold or silver, so you can't convert it to gold and silver. They don't tell you that, of course. They make you think that you do. Okay, here's the final one. This really puts the icing on the cake. Okay, so if you're an SLV or an ETF owner, or you own these kind of things online, you could say, can I at least visit the vault? And here's the real telling part. Absolutely not. The location of the vault is top secret, and that's all bullshit. You know it's not top secret. You know what it is? They don't own the frickin' gold. It's leverage. They might own a tenth of an ounce for every, one person might own a tenth of an ounce for every share of this supposedly GLD or SLV they own. So anyway, great article, something I've been talking about for a while, that when you own these ETFs, you have a great third-party risk. And a lot of people believe that they don't even own the gold and silver. Read this article. I think you'll find it interesting. And doggone it, I said I was going to keep this short, and I did not. I'm sorry. Boy, I kept it very clean tonight, though. No bad words, and I'm sure he'll be happy with that. Less editing. Let's take a look at this. What is this? Oh, one more thing. God, it's going to make the video longer, but again, nothing to edit. No curse words, so he'll be happy with that. This is one of the single biggest threats to the dollar today, and I sure wish the Wall Street Journal would put stuff in like this, even if it's kind of a like out there opinion, not their mainstream opinion. Instead of just like Wall Street Journal and all these CNBC and they're just like echo chambers. You know, they bleat the same stuff. They don't provide alternative opinions very much, and when they do, they make fun of them. They don't really investigate it. I mean, this is what we all want. So, anyways, this is something we've been talking about for a while. This is one of the single biggest threats to the dollar today. What have I been saying for months? The weaponization of the U.S. dollar. This is why that the U.S. dollar is in major trouble. They're going to have to keep printing this stuff. It's going to cause major inflation. And this is probably part of the reason, or a good part of the reason, why gold and silver are so high, is because our government, our Treasury, our Fed has weaponized the dollar. They've used, China and all these countries used to hold dollar. Russia used to hold them. All these countries held dollars because it was a safe place to keep their money. Except we screwed it up. They don't want to hold it anymore. And you've got to remember how many Chinese people and how many Russians and how many Iranians, how many other people held dollars. And if they don't want to hold them anymore, we're fucked. There you go, Marcelo. There's your bleep. But it'll be the last one for the night, I believe. So let me move along to the Wall Street Journal, which absolutely says nothing about gold and silver, says nothing about anything meaningful on their front pages. Gosh, I'm a great man. I love the Wall Street Journal, but here I am dissing them like this. I guess the more and more I look at it, the more I'm disappointed that they don't really put anything out here. Nothing edgy, nothing out there, nothing contrary to what it seems like their advertiser is telling them to put out here. Let me take a look at markets real quick. Let's see if they mention anything about gold and silver. One of the greatest, no, but they sure talk about the S&P, of course. They talk about that every day for the last 10 years. Gold and silver, gold and silver. Do you see anything here in here, gold and silver? Not a, Marcelo, ready? Not a fucking thing, period. All right, I'll keep your editing down really low tonight, so I won't say any more. For what it's worth, also, I have some great products. I probably got the lowest price on gold kilo bars of anybody in this country that you can get kilo bars from. So, if you're a player that can buy kilo bars, 32.15 ounce gold bars from a great manufacturer, I can get them for you. It's the cheapest price per ounce of anybody. We just placed an order for $1 million for a customer. Silver, I got these wonderful Turkish-made bars, these silver bars that come with a certificate, serial numbered, absolutely great bars. And as far as comparing them to a lot of the generic products, I love them. I love them. They're LMBA rated for what that's worth too. 4 9s. Again, I always said that adding the extra 9 is just marketing, but still, it's cool. And when you go to resell them, someone's going to fall for that marketing as well. So why not? You're not going to pay a dime more for it. Love these bars. And take a look at them. They're really cool. Again, this is Brian Kuzmar, Commercial Rare Coins and Precious Metals in beautiful sunny Lauderdale by the Sea, 954-493-8811. Call us if you want to know what prices are on any particular gold and silver products. And if you want to come in and take a look or get an education, come on in, because it's hard for us to do it on the phone right now. We're so busy. But if you come in, I promise we'll take every bit of time that we can to point you in the right direction. Thanks for watching. Have a wonderful evening, and we'll talk to you tomorrow. Let's see what happens.